Welcome back everyone to the Robinhood 3K Challenge. Last episode, I had some success with AMD and made $145 profit, which I spent on one share of stock and a handful of Doge. However, I missed out on bigger gains because I sold too early. In this episode, I'm going to thrust a little deeper and hopefully come out with a thicker profit. It's November 24th and I want to waste no time getting started. Here we go. By popular demand, I'll be trading Rivian Automotive, ticker RIVN, which narrowly beat out Tesla. Congratulations to Bench of Lemons for winning with 119 votes. As soon as I saw Rivian commented, I knew it was going to win, and this scared me because I really don't know what to do with this thing. Everyone knows it's overvalued. This is a car maker that makes no cars, and it doesn't have a solar company and underground tunnel company like Tesla does. But hardly anyone seems to care, and Rivian also just IPO'd, so I don't have a lot of history to go off of. This isn't my usual stock trade, but I'm not going to be a punk bitch. Brave Mikey Millions will trade Rivian. Starting with the technicals, we really don't have a lot here. IPO was too recent to even have an RSI on the daily, and there's no MACD either since we don't have a 50 DMA. I'm not really interested in shorter moving averages for a stock that has such short price history. All I've really got is price action and volume. The stock IPO'd a little over 100, mooned to 180, and then dipped back to the upper 110s where it leveled off. I think the fact that volume is decreasing as the price drops means that buyers are not coming in to swoop up cheap shares. So to me, that's bearish. If we had big volume on these green days indicating buyers really wanted in at this price, then I'd say we're ready to level off and resume higher. But so far, no such luck. Technicals are light on data, but from what we do have, bears are in control. I really wanted Seeking Alpha's quant bot to help me since it was so instrumental in last episode's AMD analysis, but Rivian doesn't even have enough history for this AI. What I can get from Seeking Alpha is some help with the fundamentals. Last episode, I turned to author Asian Investor for his AMD analysis, and he ended up being spot on. Here he is on Rivian, so I'm turning to him again. According to Asian Investor, Rivian is overvalued, big surprise, since it has a $110 billion market cap but no sales. It's got a higher market cap than Ford and GM, which manufacture 200,000 cars per month. To emphasize how significant that is, Rivian's market cap is higher than the GDP of Puerto Rico. If Rivian was a country, its IPO alone would put its GDP between Kenya and Slovakia, so probably overvalued. According to our Asian friend, Rivian is trading high because investors have an appetite for electric vehicle shares. But reality will set in when people realize that Rivian is not going to post profits for at least 3 years. I'm with it across the board with Asian Investor, but are we underestimating the power of apes? That's my concern. That no one gives a shit about Rivian's valuation, they just want to buy for momentum. And still, this Asian's DD is hard to ignore. Fundamentally, I think we can call Rivian bearish. Seeking Alpha is not sponsoring this video specifically, but their campaign from my previous video is still active. If you want Seeking Alpha analysis and quant data, you can get it 50% off through my link in the description. You can see more of Seeking Alpha in the previous 3K Challenge episode. Alright, so with my bearish thesis on Rivian, let's open up the stock. Right now, it's trading for about 114.5, down big on the day so far, already losing more than $5 in the first few minutes. I'll go to trade options, and like I said, I'm not sure the momentum traders will be willing to give up the stock, but I don't think they can keep it propped up through the end of the year. So let's move over to December 31st expirations. I want a bearish trade, and I have a small portfolio, so that leaves me with either a call credit spread or put debit spread if I'm trading at the money strikes. I usually go for the call credit spread, but my theory here is that if Rivian moves down sharply, I might get assigned early, and if you're assigned early on a put debit spread, it's max gain. So let's explore that option. I'll first buy the $115 put for $1,990. That's way too much for this portfolio. So I'll then sell the $110 strike for about $1,695. That'll leave me with a net debit of $295 for this put debit spread, which is pretty high. I'm second guessing this a little bit, but I'll stick to it. I'm going to trade 2 of these spreads since I'm willing to take on more risk this episode. And there we go, it looks like I'll actually get a fill at $280 per spread instead of $295, so thanks Vlad. Since the bid ask is so wide, it looks like I already made money here, but there's no way I'd get a fill trying to close instantly for a $100 gain. My true account value is probably something like $5,050. Let's root for Rivian to get smacked down. Alright, welcome back. It's December 6th and we'll get updated. So far, the market has gone down a little bit, so I'm down about $100 since I opened this trade, but that's mostly due to Snap and AMD coming off. The rest of the market, I'm still waiting for the Santa Claus rally to bring the stock market higher. As for the Rivian play itself, I'm actually up a decent amount despite probably overpaying for the spread. Robinhood is now valuing this put debit spread about $350 each, which would be a gain of about $140 for me. However, the bid ask is wide on these options, so I would have to give up easily at least another $20 to get a fill. Still, pretty good so far. Rivian is down below my short strike, trading at about $103. I really need volatility to drop so that I can start backing into this max gain. But time is on my side now that Rivian is down below my spread, so Theta is working in my favor. Let's give it some time to work. All I need is for Rivian to not go back up. Okay, now it's December 8th, and I've been spending some time looking for a way to deploy this pile of cash I've been sitting on all season. So I think I found my target. It's Bitfarms, ticker BITF. This is a Bitcoin mining company with gigawattage that's been bumping up a lot since 2017. And according to Brent Rodway on Seeking Alpha, Bitfarms is going to more than double its mining capacity in 2022. This is a company that's poised to mine over 3,000 Bitcoin in 2021, which will probably double as soon as they've got their new farms open, and it's trading with a market cap half that of Riot. Meanwhile, Riot will mine about 4,500 Bitcoin in 2021. So something is amiss, and I want to take a long position on Bitfarms. But I'd best not get ahead of myself. We are seeming to enter a crypto winter, and I don't know how low we're going to go. We're at about $6.40 right now. If I can enter Bitfarm around $5, I'd be a very happy man. But no need to sit around and wait for it to get that low. I can sell $5 puts expiring in 9 days for $5 while I wait. I'll only get $5 a contract, but I'll sell 2. I don't think it'll get that low, and if by the end of next week Bitfarms is still above $5, then I'll just buy a share with a premium. It's free money. Alright, locked in. Rivian's kicking my ass right now, but at least Snap bounced up a little bit. Let's let it do its thing. Okay, let's fast forward to December 15th. I turned 31 recently, so happy birthday to me. My portfolio is looking shittier by the day as the market unloves us, especially in tech. Now as you see here, my Bitfarm play isn't quite going according to plan. This put is up over 8 times in value, so of course being on the short end of 2 puts, I look like an idiot. I honestly didn't think Bitfarms would go below $5. I thought I was just going to get a free share. But here we are now at about $4.66. The puts I sold for $5 are now worth $42. Lovely. But I wanted shares at $5, so this isn't all bad. I'll anticipate assignment and prepare to start wheeling. Bitfarms is undervalued, so I'll sell out of the money covered calls starting next week. But if you guys remember the crypto winter of 2018, you know things can get out of hand fast. I remember when I sold Litecoin for a loss and then immediately watched it drop another 30% in less than 10 seconds. The order book was just selling off like nothing I'd ever seen. It was a bloodbath. If that were to happen again, Bitfarms would get hosed. So I will hedge my long share position by buying some out of the money puts. These $2.50 puts will cost me $13 each, expiring in February, but I anticipate selling $5 covered calls for over $60 each when I get assigned on Friday. That will give me some protection without interfering with my plan. And now we wait assignment. Overall, I'm still feeling pretty good about Bitfarms. As for Rivian, we've got earnings tomorrow, which I just realized earlier this week, and that'll decide the fate of my spread. I think Rivian is more likely to go up than down, but inshallah when this thing posts a $7 per share loss, I hope people will start accepting reality that Rivian is overvalued and the stock ends up tanking. I'll be waiting with bated breath. Ladies and gentlemen, it's aftermarket on the 16th, and Rivian just posted its quarterly results. I was joking about the $7 per share loss, but sweet mother, this company just dropped a loss of more than $12 a share. This thing has to get pummeled tomorrow. After all this, I think my put debit spread will print. Here we are on the morning of the 17th. Rivian is indeed getting hammered down to the 90s, and that puts my portfolio back above $5,000. So I'm still down $50 from when I started this episode, because my tech share is dumped. Still, I've got a nice gain here on this particular play. The spread is now worth $435 for my 280 entry, so that's a $310 gain between the two spreads. There's still another $65 premium left on each side of these contracts, and my max gain is $440. So I don't know why Robinhood is only calling this a 55% gain. It's actually a 70% gain. That works for me. My portfolio has recovered well off of this play, and I'm not giving the CEO another 2 weeks to pump this thing back up before expiration by announcing their partnership with Ford is back on or something. In hindsight, I think I did a lot of things wrong with this trade, but I just got lucky. This should have been a call credit spread, not a put debit spread. My reasoning about early assignment was really shaky, and I didn't realize that Rivian was going to have earnings before expiration when I opened this trade. Really, I should have had a call credit spread expiring right after earnings to maximize my IV crush. I also overpaid pretty handsomely to open this debit spread. I would have been a lot better off if I had used a different approach. However, the stock tanking overcame all those shortcomings, so I got the most important piece right. A bearish vertical spread won the day. 15 minutes later, I'm gonna ditch, and that will give me a gain of $280 in total. I usually buy a share of the stock with my gains, but I really don't want Rivian, so I'm gonna pull a pro gamer move and buy a share of TQQQ, the triple leveraged NASDAQ ETF. This will cost me $151 and some change, and I'll have $130 left over. Why am I buying TQQQ? Because a $10,000 investment into TQQQ in 2011 would be worth about $1.5 million today. So if I'm a long-term investor, I want triple leveraged NASDAQ ETFs. Even though I can't drop $10,000 into it right now, $151 right now will mean a lot in 2031. With the remaining $130, I'll buy Energy Transfer, a dividend stock that owns oil pipelines in the US. My $130 will get me a nice 15 shares and bring my total ET holdings to 17 shares. I also think ET under $8.50 is a good price, so this timing suits me just fine. And today is my Bitfarm expiration. And although the stock climbed back toward $5, my puts are still in the money, and unless Bitfarms pulls something pretty spectacular here, I should be assigned in the next couple of hours. The wheel will begin spinning, and I'll start making that thicker covered call premium, maybe as much as $67 per contract. Alright, hold up. At first, I wasn't really sure what happened. At about 3 p.m., I opened my portfolio and saw that I had no Bitfarms options left. I thought I must have been assigned an hour early, but I had no shares either. So what the hell? And then I saw this. Rather than let me get assigned on my cash-secured put, Robinhood closed my short puts for $20 each and locked in a $15 per contract loss. Why? This has got to be a mistake. I had the collateral. So now I'm waiting for a call with customer service to receive my bitching. This doesn't make any sense. So they'd better have something pretty good for me. And of course it's after 3 p.m., so Robinhood won't let me just sell another short put. I wish I had recorded my conversation with customer service. They told me that since I had a long put on Bitfarms open, they assumed my plan was to run a put calendar spread. They closed my short put early because they assumed I didn't want assignment, otherwise why would I have a long put? I mean, no one buys puts as a hedge against long shares or anything. According to the guy I talked to, traders don't get to choose their collateral. So if Robinhood wants to assume my long put is just half of the worst setup put calendar spread ever, they can do that. I don't know any other broker that would do this, and I'm really heated about this since it makes absolutely no sense to assume that I set up a calendar spread that mathematically cannot make money rather than recognize that I sold a cash secured put like a normal person. But I can't do anything about it now, and that's Robinhood for you. Whatever, this thing better freaking tank on Monday so I can buy shares myself and write the covered call. Alright, that's it for this episode. Scroll down to the comments and nominate a stock for my next trade. The stock with the most upvotes gets the trade alongside Bitfarms in the next episode. Thanks for watching, and I'll see you next time.